Hi traders, in today's video I'm going to teach you a very simple Forex trading strategy. It's an end of day trading strategy using Bollinger Bands. So if you're new to trading, this strategy is for you. This strategy can also be used intraday using the 4-hour charts, so stay with me to the end and I will give you a complete breakdown of the strategy across both time frames. Now, introducing myself, my name is Duncan Cooper. I'm a full-time trader and the senior market strategist and trading mentor at ACY Securities. Okay, so let's get straight into my MT4 platform. And first of all, I just want to show you how to open up a new chart. So I'm going to open up the Market Watch. Just left click on this button here. And I want to open a chart up of the Aussie yen just to demonstrate. So I'm just right clicking and then left click chart window. That'll open up that particular pair. Just close down that window. You can just come up and left click on the button. Now I need to turn the chart into a day chart. So I come up to time frame button, left click, and then I want to add an indicator to the chart. So coming up to the navigator button, left click, and then coming to the trend section, just left click on the plus button there, and I'm going to add Bollinger Bands to my chart. So just left click, hold, drag, drop on the chart, and then the settings, I'm just going to reset this. The normal settings are 22, but I'm going to alter those. I'm going to keep the period setting to 20, but the deviation I'm going to set to 1, and I like to have it at black, and the middle line just slightly thicker. So period 20, shift 0, deviation 1, and then black and a thicker line. Then click OK. And then what you'll see on the chart is that we have 3 lines. The middle line is a 20 moving average, and then the lines above and below are 1 standard deviation from that moving average. Now I use a similar approach just to determine trend when I'm trading intraday, but I'm just going to show you how you can trade at the end of the day. And I use the bands to tell me whether or not a particular currency pair is in an uptrend, downtrend, or consolidating. Now when price action is closing within the bands, I just consider that to be in consolidation, no trend. If though, for example, this candle here closes above the bands, now I consider that this particular pair is in a strong uptrend. And if this pair is closing below the bands, I consider this pair to be in a strong downtrend. I'm just going to close this window. So with that in mind, what I like to do is look at the market and ask myself, when does the trend start? So for example, on this particular day here, the market closes above the bands. That's the first day that the market moves into an uptrend. So that's my trigger to take a trade. So the first day that the market closes above the bands, I'm looking to buy the next day. So I'm just going to get my drawing tool. Okay, here we go. So this first day here, that's the day we close above the bands, so that's my trigger to buy. So the next day as it starts, I'm going to be buying, and I want to put my, so I'm just going to mark in where I'm buying, just there, and then I put my stop loss at the center line. And then I start to monitor the trade day by day. From a target perspective, if I'm risking 100 pips, for example here, I'm going to be targeting twice that. So I have a risk reward of 1 to 2. So I'm just going to eyeball this, but about 200 pips up the chart, my target would be approximately up here. That might be fractionally further up, but you get the point. So if I'm risking 100 pips here, I'm targeting twice that above, so I've got a risk reward of 1 to 2. Now obviously we can see in this example the price actually moves up nice and strongly and meets the target, and that's great. It doesn't always work like that. You'll set up a trade and it won't work. So looking at another example, moving back in time, price action here is consolidating, it's closing within the bands. The first day that we close above the bands to show an uptrend is this particular day here. So the next trading day we're looking to buy. So I'm just marking the area where we're buying, and the stop comes down to the center line. And we might be risking 120 pips here. So above the market we're going to be targeting 240. So I'm just going to eyeball that just to show you where potentially the target would be. That would be up here. Now obviously price doesn't meet the target, and we have one good day up, and then price starts to reverse, moves back inside the bands, and eventually we'll hit our stop loss. So that particular trade doesn't work. Okay, so we have a winning trade here, but back in time here where we've got a trade entry where we closed above the bands, that trade doesn't work, so we have a losing trade. So I'm just showing you that trades can win and trades can lose. Alright, let me just clear that off. Let's go through the trade setup for a sell. So as I was saying, if the candles are closing within the bands, we have no trend. So we're looking for the first day where price closes below the bands. That gives us our trigger to sell. So again, let me get my drawing tool. So through this period of consolidation here, the first day where we close below the bands is this day here. So the next day we can sell. So that's our entry to sell. And then our stop loss goes above the market. It goes at the center line just here. And price actually comes up this day and almost hits the stop loss, but doesn't, and then starts to move down. Now we're probably risking on this trade about 70 pips, so I'm just eyeballing it down. Target would be 140 pips below, so you've got a risk reward of 1 to 2, and that would be approximately here. And we can see that price moves down nicely after closing below the bands, meets the target, and then obviously starts to move back up. Now where's the next trade to sell? Price moves back into the bands, closing within the bands, and then the next trade where you could take an entry is at the close of this day. We close back outside the bands, so we got our trigger to sell. Just get my drawing tool once more. So we can sell the next trading day. Stop loss goes at the bands, and what we can see is we take our sell here, but then price moves back up and hits our stop loss, so we have a losing trade there. So let's just carry on. This particular day closes below the bands, so the next day we can take a trade. So we're selling at that level. Stop goes at the center line, and we can see that price moves down. Now target, I'm just again eyeballing where my target would be. It's approximately this level here. So we see price moves down, comes back and retests the bands, starts to move back down again, and eventually get taken out of our trade there for a profitable trade. Alright, just tidy things up so we can go and search for the next trade. Okay, price is closing within the bands here, and I'm waiting for the first day to close outside of the bands for another sell. That occurs on this particular day here. Stop goes at the center line, and then target would be approximately, again just eyeballing it. I'll be actually measuring it in real time, but I can't actually measure and use my drawing tool at the same time, so I'm just approximating. Target would be approximately down at this level. So just here we're taking our trade. Stop goes up to the center line, and price comes back inside the bands, moves back outside, comes back in the bands, almost closing above the bands here, but it hasn't hit our stop loss yet, and then starts to move back down. Unfortunately, the trade works out and we get taken out of our trade for profit down at this level here. Alright, tidy things up again and we'll see where the next trade is. Alright, so price starts to close back inside the band, so we've got no trend. And then we the first day that closes above the bands is this day, showing an uptrend, so we're buying at this level here the next day. Stop loss goes to the center line, and I showed this trade before. Target would be just eyeballing it again up here somewhere. Obviously we don't meet our target. Price just sees some profit and then starts to turn around and it's a losing trade. And then price is closing within the bands for a while, so there's no trend. And then we have a close below the bands here, so a trend starting, so we have an opportunity here to sell on the next trading day. And our stop goes to the center line. As we can see, our target would be down here somewhere, or a little bit even further lower than this area where I'm just marking. And then price starts to head back inside the bands, and obviously we get stopped out on that trade. So what I'm showing you here, we have winning trades and losing trades. I don't know which ones are going to work and which ones aren't going to work as the trades are setting up. So you just have to take them as they come along, and what you need to do is look at your profitability over a series of trades, so 20, 40, 60 trades. See how profitable you are. Alright, the next buy opportunity, I showed you this before but we'll just go through it. So within here we're closing within the band still, so we have no trend, and then on this particular candle here we close outside the bands. That gives us our trigger, so we can take a trade the next trading day. So that's at the level we could trade at, and the stop goes underneath here at the center line. And just measuring up where the target would be, so we want a target of targeting twice what we're risking, so approximately it would be up here, and obviously that target's met. So that's a very simple approach to trading the day chart trend. We're just looking to see, let me just clean this off, let's go through the rules again. So if the market is closed within the bands, we have no trend. If we're closing outside of the bands, the first day we do that, that's the start of a trend. So that's the trigger for us to take a trade, and the stop goes to the center line underneath. If we're looking for a sell opportunity, it's the first day we close outside of the bands. So up here, just reviewing again, closing below the bands, that's our trigger to take a sell. Stop goes to the center line, and then we're targeting twice the amount of pips we're risking below the market. Now you can trade this strategy as well on the 4-hour chart. What I would recommend that you do is trade in the direction of the day chart trend. So let's take this example here where we closed above the bands and we got our trigger on the day chart to take a trade. So I'm just going to mark that in. That particular day there is where we get the trigger to take the trade on the day chart. But as I say, we can trade this on the 4-hour chart. So that's where we have the day chart uptrend start. So let's move this down to a 4-hour chart. And it's the same rules. When we're inside the bands, we have no trend. The first candle that closes above, that's the start of an uptrend and the trigger to take a trade for an uptrend. Or for example over here, the first day that we close below the bands, that's telling you you've now got a downtrend. That's a trigger to sell. Okay, so the day chart trend from this line forward is in an uptrend. So let's have a look at where the first candle closes above the bands, and I'll just start to mark them in so we can show you just where the trades are setting up. Now the stop loss, I'm just going to show you where the trade's set up, and stop loss goes to the center line as before. So just here we get a trigger to buy, stop, at the center line, and we can see this moves up and shows profit. Then it comes back into the bands. Hopefully up here you've at least managed your trade and got your trade to break even, because it comes back down to your entry level, or past your entry level and to your stop level. Okay, so we're within the bands, looking for the first candle to close above. If it's closing on the line, just wait for the next candle. So this candle here closes above, so that's your trigger to buy. Stop goes to the center line, and we'll be targeting twice the amount above what we're risking. So our target would be potentially on this trade, again just eyeballing around about this level, and we can see that price eventually does meet the target. And if we stayed in the trade, obviously we would have made a lot more profit. Then the market comes back within the bands, closing within the bands here, so no real strong trend. And then we close above the bands just on this candle, so then you get a trigger to buy. Stop goes to the center line, and your target for this trade, just eyeballing it again, approximately up here, and you can see eventually up here our target gets met. Price comes back into the bands, so no trend through this period. Then we get another candle closing outside of the band, so that's your buy trigger to take a buy. Stop goes to the center line, and then just eyeballing. Target is approximately up here, and we can see price makes that level. Then we start to reverse back down. We close outside of the bands below here for the first time, so that's a trigger to sell. Well, it'd be triggered to sell if the day chart trend was down. Okay, don't forget with the 4-hour strategy, we need to trade in line with the day chart trend. So actually in this area here, the day chart trend is still up. So this isn't an opportunity to sell, it's just a false signal, because the day chart trend isn't down. So make sure you know what the day chart trend is. It is up, so this is no trigger. Price moves back into the bands. We close above the bands here, so that's the trigger to buy. Stop goes to the center line. Target would be up here somewhere. Obviously we can see that price does see some profit. You may have managed this trade to break even. If you haven't, price moves down to your stop level, so you would lose. Okay, then we're in consolidation through here. We do get a trigger here to buy. Stop goes here, and we can see on that trade fails. So again, you can see that there are winning trades and losing trades. Through this period, there's more winning trades than losing trades, so you'd be on the right side of the ledger. But it's a good example of just showing to you that I'm not showing you a strategy here that wins every time. If you do backtest it, I'm sure you're going to find that it wins more times than it loses. So over the course of time, you're going to be in profit. But what you need to do for yourself is backtest it and forward test it. So what I would recommend you do, whether you're trading the daily strategy or the 4-hour strategy in line with the day chart trend, is forward test it live in a demo account, trade it over 20 trades, 40 trades, 60 trades, log your trades and see if you're profitable. If you're profitable trading it live in a demo account, then that's the time that you can say, okay, I've got a strategy here that works for me. I can move forward and trade it in a live account. Okay traders, hopefully you found this video helpful. Now if you're interested in improving your trading, why not join me in my free beginner webinar series? You can register by using the link in the description below. Thanks for watching, and I look forward to seeing you in the next video.